Thank you for joining me today.
My pleasure.
Awesome. So yeah, we have a good group of people. I mentioned that we would get started in a couple of minutes. It's exactly 11:02. So yeah, today we're here talking about Zolo Mortgages. So Mahir, thank you for joining me again today.
Hi. Whoops.
Okay. Did you want to use my slides or did you have something else that you wanted?
We can continue with your slides. I have some just side info I'm going to talk about. I've had a couple of inquiries about what kind of programs we have available and what kind of lenders we work with. So I'll just sort of wing it with that info.
Okay, sounds good. Well, let's get started then with where you can go to find Zolo Mortgages. So this is something that I shared on the last webinar. You'll see a new feature now. So when you're exploring the Zolo.ca website, if you pull up any property, of course you have all of that information that's auto-populated for you from MLS. And then there's a bunch of information about price history and home value. The home value section, I always recommend that you take a look at because it really does recommend what this type of property in this area should go for. And so that's, important information to see before you enter a property. If you're going to be showing this property, if they ask you what you think of this price, you may not have had time to do manual comparables. So this is a good way of knowing approximately what the value of this home is. So it would provide you with information, at least enough information to answer whether or not it's priced really low or priced well. So that section is always something that I like to point out. But what we're talking about today is Zolo Mortgages. So this is what you will see, and this is new. So they now have, whoever is browsing on the Zolo website, they now have the option to start their mortgage application. And so basically this is what you receive, right, Mahir? When people start filling out the application, you're basically notified that there's an application in process.
Yeah, so this is the page that's on every single property, and this is the pre-qualified page. So what it lets clients do is, with the price of the home and their down payment, it lets them get an idea of what the payment is. But the actual application page, right below it, where it says that 1.35 5-year variable rate, apply now. When the client clicks on that button, the apply now button, they go to our front end, which is zolo.ca/mortgages. And that's the website right there. So you have two options when you get to this homepage, which is I'm buying a home or I'm refinancing or renewing. And both of these, if you're looking at this from the view of a real estate agent, both of these are actually very relevant to you. You have your clients who are, of course, in the process of buying a home. They may be getting pre-qualified. They may have an accepted offer that they're looking to shop around for rates for. And then you have your clients who are kind of inquiring and they're saying, I may be looking to grow my portfolio of existing properties, or I want to help out a family member with their purchase and I want to give them a down payment. So how do I do that? And for both of those types of inquiries, you can refer it to zolo.ca/mortgages. Once the client clicks the appropriate button for their inquiry, they get to the next page. I'm not sure if you have that one, Jane.
I don't think I do, but yeah, the Zolo.ca mortgages URL is here. So that's definitely something you want to share with your clients. Did you want to take over and do a live screen share and maybe show what happens next? I'm not sure.
Yeah, sure. Let me do that right now. I'll just get set up really quickly. And I'm going to share my screen with this one. And let me know when you can see it. I'll try to make it a little bit bigger.
Yep, I can see that.
Okay, awesome. So this is the zolo.ca/mortgages page. Let's say you click I'm buying a home. This is the sort of application that the client sees when they are going through the process of making an application. So there are some basic questions like, how will you be using this property? Do you have a co-borrower? So that co-borrower could be a spouse or a family member or a partner or what have you, a co-signer even. And what city is the property in? How much do you want to spend? How much is your down payment? So what happens essentially is as the client goes through the process of filling out the information, they're filtering their criteria for what they're eligible for. So in this case, I'm going to use one that's pre-populated. Okay, I don't think anything else is required. So let me just see if this works. When I click on next, you can see all of the check marks appear, meaning that it's pulling information from a previous application that I had made. Once the client has inputted all their down payment and other types of information, even the subject property information, they get a section for rates. So essentially the client is able to see, okay, based on my purchase type, my down payment, what I've inputted in terms of my income as well, this is the rate that probably would be the lowest for their current situation. Now, it's not always accurate, this section, which is where the human intervention at Zolo Mortgages takes place. And when it's assigned to a mortgage agent, they'll be able to more accurately give the client an idea of what rate, what product, what benefits are right for their situation. But it's important for you to know. I'll just drop off on this one so that you guys can share this part as well. At the very last part of the zolo.ca/mortgages page, the clients have the ability to automatically submit supporting documents for their application. So this can be everything from photo IDs, income, property information. Maybe this section is not populated yet because it didn't have a property. So yeah, once this information is populated, you can add agreement to purchase and sale. And what I'll point out to you is if you're having your client, if you're referring a client to Zolo Mortgages, have them track this application number at the bottom left corner. This ZLMM-VUN61. This is the example applications. This is a new application that was created. Just tell them when you have this application ID, send it to you, the realtor, and then you can reach out to us at Zolo Mortgages. Our email address is mortgages@zolo.ca. And just message me this and say, hey, look, I had a client fill out the application. This is their application number. And can you please reach out to them? So when you give me a heads up via email, I can manually go in and assign the file to an agent. And I can also track it all the way through and make sure that you as the real estate agent are kept in the loop as to what the status of the file is. So that is how the other side of this brokerage works. Essentially, this is Zolo Mortgages. And once the client has completed an application, they are assigned to a mortgage agent. We have close to 30 agents here at Zolo now, at Zolo Mortgages, pardon me, and we are growing next year. We'll be hiring again in February or maybe March. So that's our timeline, and that's how our system works.
Great, thanks, Mihir. So basically, if they have a personal client that they're working with, they can simply send that URL, zolo.ca/mortgages. But then if they're working with a Zolo client, I understand that they can send you the client's URL that is in the Zolo CRM, and you can access it and update the file that way as well.
Yes, that's right. So I do have access to the Zolo CRM. If you do have a client who is interested in pre-approval or maybe even a full approval, you can just copy and paste the URL from your CRM page. Let me show you exactly what I mean. So this is another agent's page, but you can just grab this lead UDID URL and send that over to me. I will be able to access the client details and we'll be able to reach out to the client manually and create an application for them. So that's always an option as well.
Awesome. And since you have your screen up, I know that last time you shared with us the calculators that were on realtor.ca. Would you mind sharing the affordability calculator again? I think a lot of agents found that really useful, and I know that there are new agents that have joined us just recently and haven't seen that before.
No problem. So this is the realtor.ca website. I think that all clients will be familiar with it. And the good part about using the realtor.ca website is that you're not referring business away. You know, this is every single realtor in Canada will be safe using this website essentially and not losing the clients. So along the top, there are a couple of calculators. There's a mortgage calculator right here. There's the affordability calculator. And this is important because it lets you, if you're pre-screening your client or if you're just speaking with them over the phone and they're kind of curious, hey, look, now that I have you on the phone, what can I afford? So these are the sort of basic questions you can ask them to get an idea of really how much can this client afford, right? So it'll ask you questions like annual income, if there's a co-applicant, their annual income, and this is gross income, so before tax. And then what kind of debt payments do they have? So you can just ask them rough numbers. You know, I've got a car payment maybe of $500 a month. There's no other loans, so this should auto-calculate. And there's this option here, of course, estimate for me. So you can either, if it's property specific, you can uncheck this and enter, let's say, the yearly property taxes. Oops, 3,500, let's say. Or you can have it estimate for you, and the system will auto-populate numbers in there. So based on what we put, so this was one person making $65,000 a year with around $800 a month in debt, with a property tax of $3,500 a year. They can afford a max purchase price of around $295,000. And so as you go down, the system breaks down certain elements of this transaction for you. So in this case, what it's doing is it's saying this person can put down 20%, pardon me, for $60,000 roughly, and they'll be paying $0 in CMHC insurance.
You've cut out there, Mahir.
Oh, I did? Oh, sorry about that. Where did I cut out? Should I restart? Can you hear me?
Yep, now we can. Thank you.
Okay, sorry about that. Let me know if it happens again. I'll try to hop on another computer or something.
Oh, maybe it's on my end. Hopefully not. Carry on. Sorry.
No problem. So yes, max affordability is roughly $295K. This was a scenario that was built out, and you can share this with your client if this is something you want to do very quickly. My preference to you is always to refer to the mortgage side and let us work our magic, because we can find numbers, we can find income even that this system doesn't have. Say, for example, the child tax benefit. That's a usable income when it comes to the additional income that we can add, and that will, of course, add to the client's max affordability. So it's a great tool to get a rough idea of what your clients can and cannot afford, and of course, it gives you the option of showing them, okay, this is the difference between what a first-time home buyer pays and what, let's say, someone with multiple properties or on their second or third home will pay, and what kind of rebates they'll get. So it is, of course, a great tool. Because it's on Realtor.ca, I encourage everyone to at least take a look at it. And it does have a whole bunch of disclosures, a whole bunch of monthly expense sort of payment information that you can see down here. I'm just going to scroll down. So over 1, 2, 3, 4, 5, over a 5-year period, it gives you an idea of the total amount paid in principal and in interest, and then the balance at the end of the 5-year term. So great tool. This is this kind of payment calculator is what we use on the mortgage side as well. We're required to disclose to clients what where their payments go. Pardon me, if that makes sense. Essentially, what I mean by that is interest and principal paid on those. So that's a great tool. And while we're on it, I'm going to spend a couple of minutes here as well. If you're a newer agent, pardon me, you want to be really familiar with land transfer tax rules. So essentially closing costs. This is something that catches a lot of people off guard. People save for a down payment. So, let's say 5% if they're buying a condo or something, that's what their aim is. But what lenders are actually looking for is beyond the 5%. They're looking for 5% plus 1.5% in closing costs. Closing costs are all costs associated with obtaining a property. That can include lawyers' fees, lenders' fees, if any applicable, property taxes, of course. So we're talking about specifically land transfer tax. And what's important to know about this is in Ontario, I'm assuming most of these agents are Ontario agents, or all of them, I would have to assume. In Ontario, when you have a purchase of a home, so let me just remember this. Yeah, so let's put in an example property of $500,000. I'm going to give you a couple of examples here. So $500,000. This property coincidentally is Richmond Hill, which is where I live. And you can see the land transfer tax is $6,475. There is no first-time home buyer rebate applied, and the amount is only towards the provincial side, meaning only the provincial government is charging a land transfer tax. Now, what happens if we change the subject property to Toronto? So let me find Toronto. There it is. You can see now same purchase price, but the land transfer tax has doubled. And why is that? It's because the land transfer tax has been applied at both the provincial and the municipal level. So important for you to note when you are working with Toronto clients, make sure they're aware that they need to save up more than the 5% for the down payment. We're looking at roughly 1.5% beyond the down payment for closing costs. There is a button here which is really useful, which is I'm a first-time home buyer. And what that allows you to show your clients is what their rebate will be. So look at this number, which is the net number. You can see it's dropped down from $12,950 to $4,475, just because the client is a first-time home buyer. So this is part of the benefit of being a first-time home buyer is the massive rebate that you get on the land transfer tax. Let's say you have a client who is, deciding between Toronto and a bordering town, like North York, Markham or Richmond Hill, something along those lines. This may be a good way to sell them on that as well. Just to say, hey, look, if you buy a property, okay, it's literally anywhere outside of Toronto, but I'm trying to make it specific to Markham with this calculator. You will be saving either $2,000 as a first-time home buyer with no municipal property tax, or sorry, I lost my train of thought. Or roughly, you'll be saving 50%. You'll be only paying, the provincial side of the land transfer tax if you're not a first-time home buyer, and that's still a lot of savings with essentially, just slightly maybe more travel. Who knows? There's it's always based on client preference. So important for you to know that this calculator is available and that you can use it really quickly with your clients to show them the difference. Jane, did you want me to do the payment calculator as well so that we can get an idea of what
Yeah, I'd love to touch on down payment because I know we get asked that all the time, what down payment is required. I know you're talking about what they need in addition to down payment, but yeah, I think the go-to answer is 5%, but that's not always the case. So yeah, if you want to talk about that, that'd be great.
Yeah, actually, that's a really good point. The down payment, minimum down payment requirements are sort of dynamic, and it's always based on purchase price. So what you'll find is if you have a purchase price of under $500,000, you'll see the minimum down payment remains at 5%. So any amount below $500,000, you're good to go with 5% down. The amount starts increasing as you go above 500,000 and below $1 million. So when you have a client who is looking at, let's say, $600,000, did I do that correctly? That's 60. This is 600. Yeah.
One more zero.
So you can see now the minimum down payment is 5.83%. And how did we get that number? It's because it's 5% of the first $500,000 and then 10% of the next $500,000. So in this case, what that works out to is $35,000 minimum down payment. The next tier, the next big jump happens at $1 million. So at $1 million or above, automatically the client has to place 20% down as a down payment for the entire amount. So you'll see the down payment here has jumped to 20%. $200,000 above $1 million. Pardon me, with 20% down above $1 million is the minimum down payment. So important for you to know. I can't tell you how many times this has happened, but it's really heartbreaking to see it when an agent gets us a deal at the mortgage side and they say, hey, here's my client. They have an accepted offer at $1.3 million. And then you speak with the client and the client only ends up having $80,000. And they're like, oh yeah, I can get away with this. I can just do 5% down. Unfortunately, that's not the case. There is no lender anyone has available that can bypass the rules for minimum down payment. And those rules are set by our mortgage insurers. So even the lenders don't have any control over this. If your client is looking above $1 million, make sure that they have the 20% down on the entire asking price available, plus 1.5% for closing costs. If they don't, you have to be very realistic and let them know. There's no point in looking at this price point for you because you just don't have the funds available to close. If the client, let's say, says, look, I have the money, but my credit score is low, or I have the money, but maybe I don't have the strongest income. So we have lenders that can help out with those situations. As long as they have the minimum down payment requirement, we can do something for them. But for clients who don't, there's absolutely nothing anyone can do. So important for you to know that. And yes, just so that I clear one other point out, just because I know that there may be some newer agents here. Going back to the scenario of sort of what we call high ratio. So less than, let me just explain this so that everyone understands. Less than 20% down is called high ratio. And what does high ratio mean? High ratio means that the client will be paying a mortgage insurance premium. And that's what this section is about. You can see at 20% down, this mortgage insurance premium becomes zero. But as you go through below the 20% amount, there are different mortgage insurance premiums. These mortgage insurance premiums are added onto the mortgage amount. So the client is not paying this out of pocket, but instead of having a purchase price of $575 with $32,500 down, that would work out to, I have my calculator, give me one sec, 575, 32,500. So instead of working out to 542,500, the total mortgage amount ends up being 564. So what that is 542,500 plus 21,700 works out to this amount. This mortgage insurance premium is added onto the mortgage amount. What the lenders do to offset this mortgage insurance premium for the clients is they decrease the rates. So when your client has less than 20% down, that is the most competitive mortgage rate that they can get in any market, right? Income and credit qualifying, of course, but high ratio deals are when we as mortgage agents are the most competitive and the most aggressive with our rates. And I think that having said that, it's actually a great time to move on to, I think, one of the biggest topics of today, Jane, and if you don't mind, I'll move on to it. It's this HSBC rate of 0.99%. So that was making headlines all over the place.
Yeah.
So this was the lowest rate in Canada ever, the HSBC rate. And what I can show you about this is maybe I can go on their website or something. HSBC, by the way, is they only have sort of a bank channel. They don't have a broker channel. So Zolo Mortgages cannot help facilitate this. And I actually don't know where that rate is. Borrowing, mortgages. Let's see if we can find the rate on their website, but I'll just explain it a bit. It's the first time in Canada that the rate was ever offered at below 1%. I don't believe the rate is actually available anymore, but it was for a short period of time. And let me just see what today's best rate pops up. So going back to what I had just said, it was a high ratio rate only. And high ratio rates are always the most aggressive. So basically it was a 5-year, I believe it was a variable at 0.99% for high ratio purchases. And oh yeah, here it is. Sorry, I missed this. It is still available, I guess. So it's a great way to incentivize your clients to, let's say, who are borderline, just say, look, you know, this is the lowest the mortgage insurance, the mortgage rates have ever been. Maybe it's time for you to seriously consider buying. Use it as an incentive for your clients to get out there, start looking, place offers. I'm not trying to badmouth HSBC or just be negative in any way, but from experience and from having HSBC used to be in the broker channel about 2 years ago or so, we know that HSBC mortgages don't have the best service for your clients, and they're also quite let me use the right wording for this. They're quite restrictive in terms of how closed the mortgage is. So basically every high ratio mortgage with a very, very low rate is it's called a closed mortgage. And by closed mortgage, what that means is that essentially the client is tied into the term of the mortgage. So 3 years or 5 years, whatever they end up choosing, they're tied in. And if they decide to refinance or sell the property, or for whatever reason they default on the loan, they have to pay a mortgage interest penalty. It's dependent always on the lender as to how that penalty is calculated, and also the program. So in this case, this 0.99 has one of the highest, or the highest, cancellation penalty that we've ever seen for a mortgage as well. So if a client is looking, make sure that they are really, really serious about that, whatever the term ends up being. In terms of our internal rates, we do have access to some really, really aggressive rates here at Zolo Mortgages, and we are really aggressive with what we offer our clients. You know, we're trying to win business. We're new to this industry. We actually just started operations in September of this year, and we're growing slowly. And the list of lenders that we have access to is always growing. We work with a couple of lenders that you may not have heard of before. So Radius, Marathon, Lendwise, Merix. These are smaller lenders, but they are very good with their service and their rates. CMLS is one of the largest lenders in Canada. They're like at the level of a bank. And you would probably just not heard of them because they don't have anything in terms of customer facing channel, but they do a lot of servicing. So they used to do TD, used to come through CMLS in the back end, and Duca. You may be familiar with the Duca Credit Union. Duca Credit Union uses CMLS for their servicing. So yep, we have First National, we have RFA, and then we can go alternate as well. On the alternate side, we do have access to Scotia. That's actually coming probably next year. Scotia's taking their sweet time getting us approved in terms of submitting. So hopefully by 2021, we have access to Scotia, but we do have access on the alternate side to Home Trust, to Equitable, and then a couple of other lenders that you may not have heard of, which are CMLS Aveo. We have access to Italian Canadian Credit Union, that's IC Savings, and there's a couple of others that are out in Alberta and BC. Now that I've touched on that topic, if anyone is from outside Ontario, we are not currently licensed outside of Ontario, but that's something we're actively working on. We are looking to get licensed in Alberta by the end of this month, and in BC by hopefully the end of Q1 2021. I have all of the paperwork ready. I'm literally looking at it on my desk right now. I just have to submit it, and I'm just, these regulators, because of COVID, everything that they quote in terms of turnaround time is thrown out the window. So they quote 10 days, but realistically it's 30 days. But sorry, I'm going off topic. Yeah, so we're not licensed in BC, but we will be by next year. And hopefully we get our Alberta clearance by the end of this year.
Awesome. So we do have some questions coming in. Yeah. I'll start with the bottom to the top. So keep your questions coming in. Do your lenders need a minimum of 20% down payment for investment properties? And also, what is the minimum down payment for a first-time home buyer who doesn't want to live in their purchase?
Good question. Let's take a look. This is our tool that we use internally. Do we have anything at 85% LTV? We do not. So the minimum requirement for LTV or down payment is 20% down for rental properties. what I'll tell you is we work with a variety of lenders who allow gifted down payments. And what that could essentially mean for your client is, hey, look, I only have 10% down, but my parents have some equity in their home, and maybe we can get 10% out and then they can give it to the client as a gift. And that gifted equity can be used towards a down payment purchase of a rental property. This is something that we do see quite often on our side. So yes, it's definitely a possibility.
Great. And then the minimum down payment for investment properties?
Yep,
that's okay.
20%.
Okay, sorry. Okay, let me see. I'm trying to ask this in kind of a way that makes sense. All right. What can you offer for self-employed people besides B lenders?
Actually, there's quite a lot of programs for self-employed individuals that are not B lenders. But what really matters is how much of the income they claim on their paperwork, on their tax paperwork specifically. So for self-employed individuals, we use either 2-year NOA average or 2-year T1 general average. If your clients are declaring income on that, we have quite a lot of programs available. So we call those business for self clients, and these are business for self income qualified. So we have quite a lot of programs at very competitive rates from CMLS, from RFA, for less than 20% down if your clients are self-employed. And these could be anything from second home purchases to primary residence purchases. Second home purchases are not rental properties. These are leisure properties. So they could be cottages, or let's say, a second condo in the city when the client lives somewhere out in a rural area. Something that can be sold realistically as a usable second property for the client and doesn't have any chance of being construed as an investment property. So there are quite a lot of programs for self-employed individuals. What's important is that the client is declaring income, one, so we can't really do these programs with clients who do a lot of cash income anymore. That was something we could do, I guess it was like 3 or 4 years ago now, with stated income, when stated income was big. But yeah, that is definitely something that we can help with.
Great. Okay, so lots of questions coming in. Great, guys. So let me just see. As I said, I'm trying to answer these in sort of or give them to you in a way that makes sense. Let me just start from the top so I don't lose track of everybody's questions. What about CMHC if they are giving lower down payment?
So I'm assuming this question may be related to the 20% down. It doesn't matter at all who the insurer is. So CMHC, Genworth, Canada Guarantee, Genworth is now called Sagen, so you may hear Sagen. The minimum down payment requirements are universal across all mortgage insurers. That is not anything that any lender can change. In fact, what we're seeing nowadays is that lenders are moving away from CMHC. So you may hear that name a lot less often. And the reason being is that CMHC has reduced their ratios for GDS, TDS. What we can use is 3944. What CMHC has mandated now, because they see some risk in the market, they're projecting some downturn, which I don't think anyone has seen in any market across Canada, realistically. So they saw some risk, and then they reduced their ratios to 3542. If your clients are approaching you and saying, I want to use this first-time home buyer incentive, so if you're not familiar with it, one of your clients may bring this up to you. There is a program from the federal government called the first-time home buyer incentive, where the government will give 5% for existing construction homes and up to 10% for new construction homes as a second mortgage. The benefit being that your client's payments on the monthly mortgage are reduced. But to use this program, we have to specifically go to CMHC. And if we go to CMHC and your client's ratios are above 3542, they're not going to accept this deal. That's why almost no lender and almost no deal that we've funded, actually 0 deals that we funded, have used this program. It's realistically, it only saves a client between $200 to $400 a month, and they're extremely restricted in purchase price, as well as options. Realistically, CMHC is becoming really stingy on which condos they approve. Something else just to keep in mind. Sorry if I went off topic there a bit, but hopefully that helps.
Yeah, no, for sure. So another question about down payment is how long does the money have to stay in the bank prior to using it as a down payment?
It's a good question. There's sort of a right answer and then also a gray area answer. So across the board, what we're looking for is 90-day history of the down payment for every single, for all funds that are used towards the down payment. So let's say the client has $50,000. We need to see 3 months history of the accumulation of that $50,000, and every deposit outside of the client's income into that bank account has to be accounted for. So if the client is randomly making $1,000, $2,000, $3,000 deposits at bank branches, or is receiving them as e-transfers, we would have to backtrack and figure out what every single deposit was. Now, the yes answer in the gray area is that specifically, I think the question says, how long is the money has to stay in the bank if it has been transferred from their hometown? So what I'm going to sort of choose to answer this question is an example of a client who had some money in India. And they were saying, hey, look, this money is in India, it's in a bank account, and the bank account is under my name. And I'm going to bring it into Canada as my down payment. And I'm purchasing the home 30 days from now. Is that okay? So the answer to that question is yes. As long as we can track the history of the money from the home country and we can show in English the client's name on the bank account in India, transferring money to the bank account in Canada, no problem. That's an acceptable scenario. What actually ended up happening for this transaction was the client was in Canada, and the banks in India, if you're aware, are very bureaucratic, and they said, for you to move that amount of money, you have to be here in person, present in person to make the request. But what you can do is transfer the money into your parent's account, and the parent can go into the bank branch and transfer it to your account in Canada. That was a bit of a problem for us because we expected the money to come from one source. But if the money ends up going into a direct family member's bank account and then coming into your bank account, even if it's from another country, South Korea, India, Dubai, let me just think of a couple of other examples. I think we've seen Japan and United States. As long as we can track the money with the names on the account, then what we can construe it as is it was a gift from the parent, for example, towards the down payment of the property. Just so that I can give you an example of how we solve these issues, we do have some creative thinkers and we can work around the rules that the lenders give us to make the deals work. And I hope that helps.
Yeah, great. Thank you for that. Is there a certain amount that they're allowed to transfer every year, or are they limited?
There's no limit that I can think of for the purposes of buying a home.
Okay.
But for the purposes of tax declaration or for the purposes of maybe even FinTrack, the anti-money laundering side, there may be some restriction depending on which country the money is originating from. As long as you get, there are certain countries that are obviously blacklisted. If you have clients from Iran and they're bringing a lot of money over, there's going to be a lot of questions. So be ready for that. Unfortunately, I don't mean to, point any fingers, but that's just the nature of the business at this time. It's just what we see. But for the most part, the answer is no. There shouldn't be any issue as long as the money is, of course, of legitimate background, I guess I could say,
Okay. All right. We do have another question here. So back to the down payment. Do lenders need at minimum a 20% down payment for, oh no, this we already answered. Sorry, it was another one about for a property with purchase price of 1.2, do they need a flat 20% down payment of the entire amount? Or is it 5% of first 500,000, 10%, so 500,000 to 1 million? Or
yeah, good question. It is a little bit confusing. For anything above $1 million, the minimum down payment is 20%. So as soon as you hit $1 million, is that a million? That's 100. There's a million. As soon as you hit $1 million, the minimum down payment is 20%. So $200,000 for the $1 million purchase. You use the example of 1.2. Let's put 1, 2, 3. So for 1.2, the minimum down payment is 20% again, which works out to $240,000.
Okay.
And once again, this is the Realtor.ca. If you go into the payment calculator under mortgage calculators, payment calculator, you can play around with this yourselves. Anything above $1 million, because of the 20% down, the client does not have to pay mortgage insurance, and they can choose their amortization period as 25 years, and I think for some lenders 30 years. I could be wrong on that, but yeah, I'll update you guys on that later.
Okay, and then about this HSBC rate, does this rate apply if you want to switch for another bank, and is there any incentives?
No clue. I have no access to that rate. If you guys have questions for HSBC, reach out to HSBC Direct. I cannot answer any questions at all because they don't have a broker channel.
All right. How can client use RSP money as a first-time home buyer?
Great question. Great question. Actually, this along with the question for new to Canada clients is something that we get a lot of. So RRSP money is essentially the clients can use $35,000 from their RRSP as down payment if they are a first-time home buyer. Let me see if I can find it's this one. It's called the Home Buyer Plan. If this is something that you want to send information to your clients about. So it's, as of 2019, the Home Buyer Plan withdrawal limit has been increased to $35,000. Why this is beneficial to clients is essentially the RRSP, depending on your client's employment, they may have programs where they have their employer matching contributions into their RRSP. So there's a lot of money in RRSP that maybe the client hasn't earned, but it's been contributed by their employer. This is why it's a great program to use if you're a first-time home buyer, is because it's essentially further leverage for clients. And the important part to know is that this program is not it's a loan. That's important for you to know as well. So first-time homebuyer RRSP program requires that the borrower repay the $35,000 into their RRSP over the course of 25 years or something like that. Let me just see if I can find those details. If I can't find them in the next 5 seconds, I will send you the information after, maybe on the training channel. But we actually have a channel on Workplace as well for mortgages. So I'm going to start using that more. That's one of my resolutions for 2021, is to make that Workplace channel more active and to share with you guys these programs. So the $35,000, once again, the clients have to be first-time home buyers. It can come only from their RRSP. The limit is $35,000 per borrower. So you can essentially have a husband and a wife, one of them being a first-time home buyer and the other one not. And that one first-time home buyer can still be eligible for this program. Or if you have two first-time home buyers who are buying their first property, obviously, both can use $35,000 from their RRSP. So essentially $70,000 of the down payment, if both borrowers are first-time home buyers, can be from their RRSP program. I think that was actually one of the newer questions. It's a limit per person, $35,000 per person, as long as that person is a first-time home buyer. And I think this is one of the most used programs, and one of the ones that you probably as realtors should make your clients aware of. The next one, and Jane, if you don't mind, I'm going to hop back into, actually, let me just think about where to do this. I kind of want to go to the government website because let me see if I can find that one. So essentially, the question that we get a lot of is, I have a client who's new to Canada. They are here on permanent resident status. Okay, so anyone who is here on permanent resident status or is a Canadian citizen is not subject to the foreign buyer's tax. That's important for you to know. So if you have someone on student visa or work visa or refugee status currently, whatever it ends up being that's not permanent resident or Canadian citizen, they're going to have to pay 15% on closing to the Canadian government as a non-resident speculation tax. There are some exceptions for that rule. Let me see if I can find that. RST, let me just do this. It's called a non-resident speculation tax. And it applies to all of these following areas. So basically all the areas that Ontario agents work, everything from Toronto all the way up to Barrie, Brantford, you name it. The purpose of this is to curb speculation. It's called a non-resident speculation tax, and speculation specifically applies to foreign wealth coming into Canada for the purposes of buying homes as rental properties or investment properties. And what it ends up doing is it makes the market more competitive for Canadians. And there are some exceptions for the rule. So foreign corporation, foreign national, permanent resident, these are people subject to the NRST. If you have a client who is, and these are the exemptions to the rule, someone who is nominated under the Ontario Immigrant Nominee Program, meaning someone who has been nominated by a family member to become a permanent resident or citizen of Canada, they are exempt from that rule. A protected person under the Immigration or Refugee Act, when it comes to anyone who is under a protected person rule, we ask them to get independent legal advice on if they will be exempt from the speculation tax, or the spouse of a Canadian citizen or permanent resident is exempt. So if you have one person who's here on a work permit and one person who's here on a permanent resident status or a Canadian citizen, that person will be exempt from this non-resident speculation tax. This is really important for you to know. There is this section on rebates when it comes to the NRST, and why this is important is a foreign national who becomes a permanent resident of Canada within 5 years can receive the entire 15% that they paid in the non-resident speculation tax as a rebate. This could be another way to sell this to your clients who are here either on student visas or work permits, that if they can come up with that 15% cash now, they can get that as a rebate in the future when they transition into the work permit or Canadian citizen stage of their life. And further to that, we can definitely do new to Canada purchases, especially for people who do not have established credit history. I don't have the program available. Maybe I do actually. Maybe I can show this to you so that you guys can see. This is, let me go into the new to Canada program and I will show you what we can use. So for clients with no beacon and a SIN number starting with 9, certain lenders can do up to 80% LTV. We can even do high ratio purchases. What we require is 12 months bank statements and 12 months utility bills payments. So that could either be, the utility bill could be a rental payment, it could be a cell phone bill, it could be heating, hydro, water. We just need some kind of history that the client has been paying their bills on time for 12 months in this country, and we don't have to provide a credit report for that client. So if that's a concern of your client that I didn't get a credit card, I don't have an established credit history, with the new to Canada program, we can definitely qualify these clients all the way up to 95% LTV. And yeah, I think that that's one of the programs that is very applicable to you as a Zolo realtor, because the majority of the demographic that uses our platform, I don't want to say majority, but there is a vocal um, a vocal majority that does use the platform that are new to Canada. We're talking about people from India, Africa, a lot of people from South America as well. Um, these are the kind of backgrounds of people that you'll see a lot of. And if you do see people here on PR status or work permit, make sure that you ask them the questions about, first of all, do they have an established credit history? What is their tenure in the country? And is their down payment available in Canada? And if it's not, is it available in a foreign country in a bank account in their own name? So if that's something that they can answer appropriately to, we can definitely qualify them. Or if you need a second opinion, feel free to refer to us. We will ask those questions and get you the correct answer. Sorry if I went off topic. I know that we're getting a lot of questions.
Yeah, no, it's great. Can you see the questions coming in? I think we've addressed most of them. I know that there was one that I wanted to end with, so I'll just let you answer any other ones that have come in. But I know people ask all the time about getting their mortgage license and whether they can hold both licenses in real estate and mortgage. Maybe if you want to just address that at the end.
Yeah, sure, no problem. Yes, we do have a lot of dual licensed agents. Yes, you are required to have both licenses at Zolo. So Zolo Realty and Zolo Mortgages, you'll have to have both your licenses. And the restriction ends up being that you're only allowed to receive leads at one side of the brokerage. So you can only receive leads on Zolo Real Estate or Zolo Mortgages. Um, for compliance reasons, if you are the real estate agent on a transaction, we cannot let you be the mortgage agent on a transaction. But that's at this point just a formality. My recommendation to you is if you don't have a mortgage license, do not pursue one, because it's not worth the costs of getting the licensing and insurance in place. We're going to be coming out in 2021 with a direct referral program with incentives for real estate agents. We're reapproaching this. I'm working with management here to come to some solution where we can compensate you as real estate agents for your referrals, and we can also track the number of referrals. And the more referrals you give us, the higher your compensation ends up being. So it's like a tiered system. This is something we're really working on for 2021. We're going to try to integrate it within your CRM. If you've seen it on the contact page, there is a non-functional button for mortgages under every single contact, and we're going to try to get that functional. So yeah, I mean, for the 5% of you that do have mortgage and real estate agent licenses, you're welcome. If you do not, my recommendation is do not pursue it, because it's just not worth the time, or pardon me, it's not worth the money. That's the most important part at the end of the day. So there's a couple more questions. I do have about 5 minutes left. I'm going to pick and choose. Are there any lenders without strict income requirements? Yes, we have multiple programs with no income requirements, but the caveat being that the clients have to be high net worth individuals, where they essentially have liquid funds equal to 60 or 70% of the purchase price of a property. And that's always a program that's available, with the caveat of having no income proof. If the clients actually have zero income, then there is no program that we can offer them. It's those no income requirements are for people with high net worth. Do we have any program lender for Canadian citizens working in the US and filing all tax returns only in the US? No, we don't. You have to have your Canadian tax returns done for any lender, alternate or AAA, to consider the client's income. Is there any referral program to realtors to refer clients to Zolo Mortgages? we're working on this. First or second week of January, I should have an answer for you. Can a buyer get a mortgage without being in Canada? There has to be a good reason for it. There has to be a really good reason for them to be getting a mortgage in Canada. And going back to that second question, you have to declare your income in Canada as well. So hopefully that helps. How do you guys do USA mortgages for Canadian tax residents? It's essentially the same way. We can use the declared income in Canada, I believe. Let me just double check. Yeah, so foreign income, I don't use that bank. Let me just see. Foreign income is allowed in Canada as long as it is claimed in Canada, okay? So as long as the client is claiming for tax purposes that income, we can use the entire job letter pay stub information to qualify the client, and then we can do the conversion. This is a good question. Any short mortgages for 2-3 months fix and flip? Yes, there are. We do offer private loans that are open term, and the open term can be as little as, let's say, a 6-month term, which is completely open, at which point the client can buy the property, renovate it, and flip it. And we can go all the way up to, I think it's like 2 or 3 years with a completely open term. The rates start at around 7.99%. I think that's a really competitive private mortgage. And we can go up to 80% loan to value on those, so 20% down from your clients. The private mortgage industry is always based on the location of the property and the marketability of the property and the intended use of the property. So if the house is not livable, can you do a mortgage? No. We've actually had a couple of inquiries for properties that either had issues with mold or the property was completely dilapidated, and the purpose of the mortgage was to destroy the existing structure and to build a new home. When you have anyone who is saying, I'm approaching you either for raw land purchase or for the purposes of doing a complete new structure on the property, that does not end up being a residential mortgage. That ends up being a commercial mortgage. And when it's a commercial mortgage, then we have to refer it out to one of our commercial partners to take care of. When it's a commercial mortgage, essentially it's like a construction loan, which is based on liens and it's based on construction progress. So it's more complicated than a residential mortgage, and I can't really explain it in 30 seconds. My advice to you when it comes to raw land is don't don't do that transaction, because the amount of inquiries that we've seen from clients who are looking to purchase raw land at $200,000 in the middle of nowhere is huge. And right now, no lender is looking at those properties at all. So try to avoid those, especially if it's agricultural zoning. There's a huge amount of background knowledge and due diligence that's required on those purchases that goes beyond just writing an agreement of purchase and sale that we do not recommend. But I have reached the time limit. If you do have questions, my email address is mortgages at zolo.ca, or yeah, that's where you can reach me, mortgages at zolo.ca. If you have questions, if you need to do a referral, please email in to mortgages at zolo.ca. And I will get back to you. And my number, if you do want to reach me direct, 416-568-1751. And look forward to hearing from you guys.
Yeah, thanks so much for your time today, Mahir. So many takeaways. So thank you for answering everybody's question. And I look forward to doing this again with you in the new year.
No problem. My pleasure. Happy holidays, everyone. Happy New Year, and see you guys next year. Take care.
Absolutely. Thanks so much. Bye, guys.
Bye.
Happy holidays. Bye.